Alrighty. Okay, so welcome everybody to the second Lodgecast, where we're going to be talking to community managers Smeddy and Sinatra. We've scheduled in about an hour, so we expect it to go on, well, for that long. It'll be till 4 o'clock UK time. Today's topic of discussion is RToken adoption and also governance. So we're going to try and focus on those two areas. If we've got time at the end, we've got some prepared questions, but if we've got time at the end, then we'll open it up to the floor to anyone to ask. You can either DM Chad or just put your hand up at the end and we'll go through them. We're not promising we've got time, but that's maybe the fallback plan. My name's Mallow, and I've stolen this account for the purposes of this Twitter Spaces. So I don't normally tweet under this. I tweet under S. Mallinson. So just to make that slightly clear. And we're I'm also going to introduce you to XXL size Chad and Braden, who's also here. Then we'll chain on to a couple of others, and then we'll get into the questions. So I'm an admin on the Telegram, and I do a weekly update, and just an active member of the community, really. So that's me, and I shall hand you over to, in his preferred naming, it's XXL size Chad.
Yep. Thank you, Mal, for the introduction. I can go by Chad, and I like to think of myself as the community degen. I'm just an active member of the community as well. I will pass you along to Braden.
Hey, so yeah, I'm a Lodge admin too. My name is Braden. And so yeah, just interested in trying to spread the word of Reserve a bit more, trying to unlock the knowledge that other members in the community and maybe some of the Reserve team members have, in kind of trying to disseminate that knowledge to everybody else so that we can, all learn a little bit more. Oh, and Sinatra, please introduce yourself.
Thank you, Braden. Hi, everyone. Thank you for inviting me and Smeddy. Very happy to be here. My name is Sinatra. I am one of the community managers at Reserve. My actual title at Reserve is the RToken Community Guild Leader. So that means I do a bit more stuff than only community management. I'm also involved in governance and actually really a lot of stuff within Reserve. And I think I know the protocol quite well, so I hope to share some of my ideas today.
Cool, and then hey everyone, Smeddy here. Top league for you, my real name's Ed, and I'm a community manager here at Reserve. I was a ranger first for a good year, 18 months, and then I kept tweeting and writing and talking about Reserve so much that eventually they said, come on board, better to have you inside the tent. So that's what I'm doing, much like Braden, spreading the good word, also keeping the Telegram clean and responding a lot on Twitter and helping with articles and dissemination of knowledge. And that's me.
Super duper. Okay, so let's make a start. First up, we're interested in knowing how Reserve thinks the RToken adoption might occur after mainnet. What are your thoughts on that?
Yep, I think about this stuff a lot, and so I'll share my personal opinion about the stuff that I think is going to work out and the way that I think it's going to evolve. So just in case for anyone here new that doesn't know what we're talking about, so an RToken is basically a Reserve stablecoin. So within the Reserve protocol, anyone is able to create a stablecoin, and we call them RTokens. And we'll get into some more details about that, but just so that everyone is aware, after our mainnet launch, we will have a platform where anyone can permissionlessly create stablecoins, and the possibilities in these stablecoins are really, really great. So so anyway, the way that I think about these stablecoins is the following. I'm going to focus on the first R token that we intend to launch after mainnet, which is, for those of you that know Reserve a bit, you know that we have RSV right now, which is our basic US dollar pegged stablecoin. But we think with our protocol, we are able to create many more complex stablecoins, and also that allows for many more features. And so the idea is about a first new R token is to have a reserve stablecoin that is that has, how do I explain this? It has passive yield for the holders. That's one important aspect to know. And that means that people can just hold on to the token. And because there's some magic going on in the background, and I can get into what that magic is, these holders just get passive yield by holding the token in their wallet. So you don't have to stake the token, you don't have to lock up the token. Simply by holding it in your wallet, automatically your balance goes up. And so that's a very nice option for people that might not be very well aware about crypto staking or aren't very crypto native. And then a second aspect that is very relevant about this R token is that it will have insurance against collateral default. So that means that RSR holders will be able to stake their token on that R token to insure it. And we can go into more details, but I need to preface this because it's these aspects that make the adoption, the story about adoption make sense. Okay, so the way that I think about R token adoption, or that R token adoption to begin with, is the way that I think about it is in 4 distinct categories. The first category about users using that R token is obviously our existing Reserve app audience. So as most of you will probably know, we have almost 600,000 registered users in the app, a bit over 100,000 weekly active users. And so the way the app currently works is these people have access to RSV, so the US dollar pegged stablecoin. They save their money and they pay their money in basically a digital dollar, which is a stablecoin. However, our intention is to make that new R token that I was just talking about, make that available for these users. And we're kind of going to promote or market it as a savings account in the app. And why that's a savings account is basically it's pretty risk-free in the sense that it's insured against collateral default. So the RSR holders insure it. And these people can get the passive yields that I was talking about on their money. And so the way that I think about it, it just makes total sense for these people. Keep in mind, like the people that we serve, the Reserve app people that we serve are people in Venezuela, Argentina, Colombia, etc. So mostly Venezuela, and these people have not had the option to save their money for a long time. And so us being able to provide a savings option for the first time in a very long time, I think is a pretty big deal. And for me, it's almost a no-brainer for these people to start using that R token to save money with yield. And so that's the first category. So I think that I do think there will be significant demand for that new R token with the existing Reserve app users. And by the way, when I say Reserve app users, I'm solely talking about the normal everyday people like you and I living in Venezuela, Argentina, etc., wanting to save their money. So that's category 1. By the way, I might explain a lot about this stuff because I'm really excited. I'm the biggest fan of the project. So please interrupt me if I'm going into too much detail, or if you want to shift the conversation to something else. But anyway, I'll continue for a little bit longer. Category 2 that I think about, also very interesting, is the companies that use the Reserve app today. So if you look at the stats of the Reserve app, we have many users and we have many more normal everyday users than companies. But if you look at the volume that gets transacted in the app, 75% of all the volume is actually from companies. Obviously, companies transact much larger volumes than an everyday individual would do. And so we have spoken with these companies that use the Reserve app already, and there is already some signs of people wanting to use that R token, and it makes total sense. And I'll explain why it makes sense, because these companies, just like companies in other countries, they have a treasury, they have money saved up, and that money is typically kept in simple US dollars. Now, simple US dollars is cool because it's liquid, but especially now with the rising inflation rate of the US dollar, you kind of want to go look for other solutions. And one of these solutions is to maybe buy some volatile assets like Bitcoin or some equities like some stocks, but you definitely also want a liquid, stable option or minimum stable. And what we will be able to offer them is what we call a stable plus token. What that means is it's minimum stable, but it will actually gain yield on top. And so what that means for these companies, it's for their treasury. In my opinion, it's an ideal treasury asset because it's very liquid and it gains passive yield for your treasuries, and that's ultimately what you want. You want to make your treasury assets as productive as you can without much risk. So that's category 2. I think we might see again significant demand from companies using the Reserve app wanting to use that savings option. And then category 3 is related to that. Category 3 is, so up to now, the Reserve app has only served one audience, and that's the people living in the countries that we serve. But after Mainnet, since the Reserve protocol will be just a fully decentralized protocol, anyone can use our tokens, we will actually be serving a new audience, and that new audience is just the crypto world as a whole. And so category 3, the way that I think about it, is other crypto companies, not just the companies in those countries we served, but also just general crypto companies. And the same use case applies there. So there's a lot of crypto companies with huge treasuries, especially because crypto has boomed for quite a while. So a lot of companies have huge treasuries, and they're looking for solutions to make those as productive as possible. And again, the liquid part and the stable part is very relevant here. And there's actually a story I can share here that I think conveys why it makes so much sense. So a while back, we at Reserve, we started thinking, so we also have a pretty large cash treasury. And we started thinking, okay, so we want to make our treasury as productive as possible. What should we do with it? And so the first thing that came to mind is, okay, let's go to a DeFi protocol like Compound, Aave, or some other DeFi protocol. Let's put some of our assets in there. For example, let's put it in USDC and let's stake our token there. And so the way Reserve works is that we're always super conservative. We also do a lot of analysis before making a big decision like this. And so basically the team, the analysis saying, okay, what are the risks? And is it really worth doing that? And basically, the conclusion we came to is that it's probably not worth doing that because the risk of these protocols being hacked or a bug being exploited is too large. It's not large, but it's too large for many of our millions to be at stake there. And so we, as Reserve, we will be using the new RToken. It's one of the use cases that we're excited about. So why the new RToken is better is because it has the RSR insurance. And so with that RSR insurance, we are confident enough to put some of our millions into that RToken. And so that's what we'll effectively do. So after Mainnet, you will see Reserve put some of their treasury into that new RToken. And if it makes sense for us to do that, then it definitely will make sense for other companies to do that too. And we are actually hiring, we have one person in what we call the RToken BD squad, business development squad. We have one person already. He's currently traveling around the world, going to different conferences, meeting people, making connections with different crypto companies. And we are hiring more people to basically spread that message of what that new RToken does to these crypto companies that I've been thinking about. And again, for me, it's a no-brainer just because if it makes sense for us, for Reserve to do this, then I'm sure other companies will want to do that too. And then, sorry for making my explanation so long, but last category is basically crypto natives. So Chad was saying he represents the degen community. Well, if you use our tokens in a special way, if you want to yield farm, there's some really interesting strategies that you can do. One thing you can do is, well, I'll let that in between for now. But basically, since anyone can create an R token, and because R tokens are just simple ERC20 tokens, and there's a lot you can already do with ERC20 tokens. There's a lot of options for creative thinking with R tokens. Actually, I'll give one example. So with that new R token that I was talking about, you get a certain amount of passive yield I was talking about, right? But then you still have the R token, so you can use that R token to go to a different DeFi protocol, stake it, for example, and get a yield on top of that. Or you can do now we get in degen theory, that's the last thing I'll say about this, but you can do a technique called folding. You should look that up if you're interested. Basically, it's a leverage staking position with something like R tokens. So anyway, by the way, I'm saying these are the possibilities. Like I see people, I think people will do this. I can't guarantee if that will actually happen. I am pretty certain that those categories 1, 2, and 3 will definitely happen. But anyway, we'll have to see what actually happens.
Wow, thanks for the fully qualified reply there, Sinatra. There's a lot in there. I suspect what we'll probably do is follow up on a couple of those points once we've digested it. I think Braden has our second up question, if I'm not mistaken.
Yeah, that was a really good response, Sinatra. Thank you for going at length. It's good to hear everything. So one aspect of reserve that doesn't get talked about too much yet is the long-term goal. And it's something that really made me, like quite excited for the project when I first found out about it. But it kind of almost not has gone by the wayside, but we just don't hear about it as much. Can we talk about it, especially now with the inflation rate of the US dollar rising? It's important for the world to find a non-fiat solution. What can you tell us about Reserve's work so far on that front?
Yeah, I can tell you a lot about it, and like I share your passion for that long-term goal. It's also the thing that gets me most excited about the Reserve project, and I can't wait to work on that more. But anyway, so I'll give some context for people that might not be super into Reserve just yet. So what we're talking about here is Reserve's long-term goal, and what that means is I've been talking about the Reserve protocol, and the Reserve protocol is a protocol where anyone can create an R token, so a Reserve stablecoin, and anyone can choose how that R token is backed. And so I've just been talking about the first use case, which is that passive yield and insured stablecoin, which is an awesome it's an awesome token. But what gets me more excited is this long-term goal we're talking about, and I'll quickly explain what we mean by that. So all stablecoins, well, almost all stablecoins that you see in crypto right now are still what they call fiat coins. So they are effectively still pegged to fiat currency, and fiat currency are just the currencies you use in your everyday life, like USD, Euro, etc. Especially now, as Braden says, especially now with the inflation rate of the US dollar and other currencies rising, we think we need to have a solution that is non-fiat pegged. So basically, we're talking about creating a new currency that is not related to fiat currencies. And like we've already done a lot of explorative thinking about this, and the way that we think about this is the theory is and actually maybe I should give some more context. So we've been working with some advisors of us. One was managing the Harvard Endowment Treasury, and one was managing the Treasury for, I think it's the Thiel Fund or the Thiel Foundation, something like that. Basically, a treasury by Peter Thiel. And so these people have a lot of knowledge in that area. We also have some economists as our advisors, and so with them we have come to a theory where we think we can actually beat the fiat currencies that exist today. And the way we think that can happen is on top of the Reserve protocol. And so we'll create a new R token, a new Reserve stablecoin, but instead of it being backed by other stablecoins or other typical cryptocurrencies, it would be backed by 50 plus, and it could even be 100 plus, like many different real life assets. And these real life assets would be put in that basket in such a way that how do I explain this well? They would be put in the basket in such a way that the total value of the basket remains stable, and it would actually remain so stable that it would become more stable than any fiat currency that exists today. And I'll give a simple example. So what we use in that basket is called anti-correlated assets. And what that basically means is if asset X goes up in price, asset Y tends to go down in price. So typically when equities go down or when there's an economic crisis or whatever, gold tends to go up, right? And that's just one very simple example. But obviously, like this basket, it might include some precious metals like gold and silver. It might include some equities. It might include some commodities. It could be everything. Like it could be flour. It could be weed. It could be anything that you can think of. And basically, in that theory that we developed, and I'm saying theory, but it's actually more than a theory because it's an actual goal of us that we're working on. So that goal says, or what we're trying to achieve is creating a basket that will follow the fluctuations in the global GDP. And I'm not trying to make it too complex, but it's important to understand. So if you look at a chart of the global GDP over multiple years, you'll notice that, for example, in one of the worst economic times in 2008, in the economic crisis, the global GDP only dipped about 2%. So keep that, like the world was, or the financial world was burning, like everything was going wrong. There was a big recession, and the global GDP was only dipped about 2%. And so what I'm saying here is, we think we can create a basket that follows that global GDP. And so if we manage to achieve that, that means that we'll have a currency that is basically better than any fiat currency that exists today. And more so, we can create that currency in such a way that it does not inflate. So what that means is you have 100 of that currency today, and in 100 years, it will still be worth 100. Now, like I'm speaking from a theoretical perspective, so keep in mind this is an idea, this is a goal of us, we're working on it, but like there will definitely be challenges for us to get there. So keep that in mind, but it's definitely like one of the most exciting parts, at least for me, for the Reserve protocol. One more thing I'll say is that in the past few months, we have actually started. So in the very beginning of Reserve, there was a lot of thinking about that. And in the past few months, we've been starting doing more practical work. So we've been talking to some third parties. We've been talking to some of our advisors and some other people that we've come in contact with that are interested in the same goal. And basically, there have been these explorative discussions about what will that basket actually look like which assets will we want to include in that basket. And so I think during our next town hall, which is the community event that we do or we intend to do every once in a while, I think Nevin will actually present some of our ideas that we have explored there. So yeah, it's definitely going on. Like there's some explorative work being done. It will take us a long time to get there, or like it's going to be difficult to actually get there, but it's being worked on. And I do expect that. So right now, the main goal for the protocol is mainnet, obviously, right? After mainnet, we have a period of that new stablecoin or the stable plus coin that I was talking about. And somewhere after that, or somewhere in that period, we're going to start putting more and more work into that non-USD or non-fiat RToken. One last thing I'll say, so again, so I'm so sorry for talking so much, but one last thing I'll say is we are now hiring a new person, a full-time person that will actually start doing backtesting on one of the draft baskets that we have worked on. So what that means is we have a very early version of what a basket of that, what a basket for that RToken might look like. And this person is going to do backtesting. So he's going to test the stability of that basket over the past, let's call it 100 years, and seeing if it actually makes sense. So yeah, definitely being worked on.
Wow, cool. I mean, honestly, I think everybody's really excited for that. Thank you for giving us a very thorough explanation. Chad, I think you have a question here.
Yeah, so my questions were more about, I guess, circulating supply. So I saw that around December 2021, that the RSV circulating supply has stayed at roughly about 28 million. But since December of 2021, you've seen just tremendous growth with the amount of merchants and the amount of users that are actually transacting in the app. Um, and I would think that there should be some correlation between growth of users and merchants, as well as a growth in the RSV that are circulating. And I was just kind of curious of why we haven't seen that growth in RSV yet.
Yeah, makes sense. Makes sense. So the fact is that right now on-chain RSV has a max cap of 30 million. So that means that on-chain there can only be a maximum of 30 million actually be minted. And the reality is, like, on-chain RSV, you can't really do that much with it right now. So some people have in the past, people have had approved a certain proposal on Curve to get a lot of yield on it, like a boosted yield. And then at that point, there was a lot of minting of RSV for people to yield farm. But basically, on-chain RSV at this stage doesn't really serve that much of a use case yet. Rather, the Reserve app, since you're talking about, like, the way I understand your question is, you're saying we're seeing so much adoption of the Reserve app. Why is the circulating supply not going up? And the fact is that the transactions in the Reserve app, those RSV transactions, are purely off-chain. That means, so they're not transacted on the blockchain. And the reason why we do that is basically as our solution for a layer 2 right now. So instead of doing that on chain, we do it in the same way as an exchange, a crypto exchange does it. So we just, it's a centralized solution for now, and we use that. We definitely want to change that. So we want to go to a fully non-custodial solution. So that is definitely a goal of us. But for now, it is still that off-chain transaction. Regarding the circulating supply, we do keep track of the circulating supply off-chain. So again, what you're seeing is the on-chain supply, those 30 million about, but the off-chain supply is many times larger than the on-chain supply. And I'm not actually sure if I can announce the number right now, but I do know that the Reserve dApp, the user interface that we'll be releasing on Mainnet, will actually show both the on-chain and the off-chain circulating supply. So that way, you will actually see all the adoption happening in the Reserve app be represented in RSV's circulating supply.
Okay, that's interesting. So after mainnet releases, we will see all these merchants and app users interact with the protocol. Am I hearing that correctly?
No, they won't interact with the protocol. So they will still be interacting off-chain. So you won't be able to follow transactions of the merchants and of the users on a blockchain, like on Etherscan or something. You won't be able to do that. That will only happen when we start doing on-chain transactions. But what I'm saying is you will have statistics of the actual circulating supply, because for the dApp that we're building, so for the user interface, we just take the off-chain supply and show it in that dApp. Does that make sense, Chad?
Yeah, it makes more sense. Yeah, and then I guess my my last question that I had was still on the topic of circulating supply, but more with RSR. So the amount of tokens that have been unlocked seems to be a lot greater than the amount that have been in the circulation. Do we have an estimate of what the potential circulating supply of RSR will be by year's end?
It's a good question. I can give you an estimation because it depends on, and I should probably, for context, I should probably give some context about what the unlocking is about. So for anyone here that doesn't quite know what we're talking about, right now, since January, we have started the RSR unlocking period. So what that means is the original investors and team members, they have some locked RSR, and that locked RSR is being unlocked. The way that happens is through, I'm not going to make it too complex, so let me keep it simple. So the majority, almost 90% of these tokens are being unlocked with heavy selling restrictions. And the reason we do that is because obviously there's going to be new tokens in the circulating supply, and we don't want the price of RSR to be impacted too much from this unlocking. I can't give you an estimation for what those will be, because those selling restrictions, what those are, I'll probably go into some detail about that. So these locked RSR holders, they are able to, so they can make three decisions, or two decisions. Either they just hold on to their tokens if they believe in the long-term goal and they think that RSR might be worth more or might be more profitable in the future, then they just hold on to their tokens. They can also decide to sell a bit, but if they decide to sell, these heavy selling restrictions, they come into play. And what these restrictions are, so these locked RSR holders, they can make or they can place sell orders, and these sell orders first get matched with OTC buying demand. So we have a certain amount of RSR that needs to be sold, and we match it with OTC buying demand. Only if there is not enough OTC buying demand for the selling demand, then the OTC desk we work with starts selling tokens on the open market, so on exchanges that you're aware. However, and this is very important for everyone here to understand, the selling on exchanges can only happen up to 3% of the real daily trading volume. And so I'm saying real daily trading volume. So the OTC desk we work with, they can actually access the real daily trading volume. So any wash trading and etc. is all excluded from that. And so what that means is, even if there would be certain high sell demand, those tokens won't actually be sold in such demand, in such amounts, because they can only sell up to those 3% of the daily volume, the real daily trading volume. So I hope that kind of gives you some context. Something that I want to mention here that is probably important for people to know is, I was talking to some people on Discord yesterday, and people were sharing some concerns with me. They were saying, well, we like the idea of the selling restriction. Oh, and about those, I want to say one thing about the selling restrictions, and I want to just to make sure that everyone understands, like, what are the effects of these selling restrictions. Because we've worked hard on getting these selling restrictions in place, and I want people to understand why that is. So just one quick example is the power of those selling restrictions. You can see by some recent price action of RSR. If you look at the price action of the last months, between March and April, the price of RSR actually went from 1.1 cent to 2.2 cents. And that was while the unlocking was happening. So that kind of shows the power and the strength of these restrictions. And I was telling some people in the Discord yesterday, I really wonder what would have happened if the general crypto market wasn't in a bit of a downtrend right now. I really wonder what would have happened if the unlocking was happening, for example, in a general uptrend. And I think there's a good chance of people not even noticing that tokens were being unlocked. But anyway, that's my personal opinion. Back to the thing that I wanted to say. So these people on Discord, they were sharing some concerns with me. They were saying, okay, we're happy that you did these selling restrictions. However, these restrictions started in January, and on the website it says you have a 6-month period, and after the 6-month period, the people, like if these locked RSR holders did not sell all of their tokens, they just get the remaining tokens. And so they were kind of worried about people getting a large amount of tokens at once, because they were saying, well, what if these people wanted to sell a lot, but they couldn't because of the selling restrictions? If they just get a large amount of their tokens, wouldn't they just sell at that point? Isn't that a risk? And so something that we probably haven't made clear enough is the fact that anyone that signed our option 1 contract, meaning anyone that agreed with the selling restrictions, so everyone had to sign a new contract, they all agreed with a prolonging of these selling restrictions in the case that there would still be selling demand after those 6 months. So what that means is, let's say we're July, and normally the 6-month period would end and anyone would receive their tokens. If we see that there is still selling demand, if that would be the case, then we can just prolong those selling restrictions, and they can be prolonged for like an undetermined amount of time. We can keep them going for as long as it's needed. And so that kind of took away the concerns of these people, and for good reason, because that means that these selling restrictions that I'm talking about now can just continue for as long as there is selling demand. Does that make sense, Chad?
Yeah, and actually that's interesting because I don't think a lot of people are aware of that.
No, when they asked me yesterday on Discord, my first reaction was, "But this is on the website, right?" And so I checked the website, and I think we linked to a video where it's explained, but we don't actually put it in text. In text, it just says after the 6 months, the token, like everyone gets their tokens. And so, yeah, I must admit, I don't think we've explained it clear enough. But what I'm saying is the truth. So that is actually how it's going to play out.
So then I guess to follow up with a quick question then. So then after that 6 months, essentially, if there is no more selling demand, the circulating supply will more or less probably stay the same. What if there's a short period of not a lot of selling demand, but then, 6 or 12 months down the line, there's a huge selling demand again? Does the OTC desk kick up again, or is there only one way for these holders to sell, and that is through the OTC desk?
That is certainly the case now, but the way we think about it is, so you have these selling restrictions going on for as long as there is selling demand. If we get to a point, or like normally this should be after those 6 months, but let's say we get to a point where there is just no more selling demand, then those tokens will be released. Like that was the original plan after the 6 months. So these tokens will be given to these locked RSR holders. However, we don't see any risk in that anymore, because if these people had the decision to sell, like the intention to sell off their tokens, they would just do that as fast as possible in those 6 months. Right. So the way we think about it, the risk is basically taken away if you see there's no selling demand anymore. That risk is taken away. And to answer your question, so from that point on, the circulating supply will it will grow because those tokens are unlocked. And that's the end of it. So that's how it plays out.
Makes sense.
Yeah. Sorry, Chad. Okay, yeah.
Can I ask real quick, just as a follow-up to that, how exactly are the VC coins being custodied? Can you tell us anything about that? Or are they being custodied?
Are they being what? Sorry.
Is Reserve or another entity custodying the coins of the VCs?
I don't know the exact answer to that. What I think a third party custodies the tokens exactly, and then we have one OTC desk which we work with that handles the orders that they can place. I think that's how we work with that. I can't give you a guarantee on that. Okay, thanks. I think Malo has the next question here.
I do, yes, but I'll just make a bullet point of making sure we tell the community about that agreement, that after the 6 months ends on the current option 1, then that can be reinstated for an indefinite period of time.
Correct.
Okay, cool. So let me bring Smeddy in at this point. So Smeddy, you've kind of been the reporter of Reserve with the articles that you've been writing. What kind of content do you think we can expect from you in the future?
Ooh, good question. Let me think. I mean, short term, I'm always trying to think of a way to sort of translate between heavy tech talk and make everything a bit more layman for people. So the kind of conversations you would have with your friends or even among investors. And I think one of my main aims really is for people to see Reserve functioning as a business. And it's a business that's very heavy in the crypto world, and it's taking the tools from crypto to make the stable platform, to make RSV work, to make RSR the recipients at the end of all of that. But the reality is they've not just grabbed a ticker name and started shilling their wares and let's all get the price up to the moon. It's a very real business. I mean, on my first day, what surprised me is there's a HR team well, certainly a HR person, 2 people. And it's, what are we up to now? 195 employees. Like it's a real functioning business. And I miss this sometimes, that there's a lot of people waking up each day and working pretty hard in their own section. So whether that's a BD manager in Venezuela, or the Mexico team, or the compliance team, the legal team, the fraud team. If we took crypto out of this, it's a functioning business. So I keep wanting to dig into various parts of that, interview them effectively, ask for their secret documents and data so we can pass it on, and show that, for me, Reserve is very much about building value through adoption, through partnerships, through users, and that's what's going on. And it's we could pivot the other way and be the company that goes, oh, we're talking to these people today, we're talking to these people next week. But in reality, it's sort of quiet, conscientious people showing the use of the product to other companies and saying this is what we can do for you, and building up to that. So from my end, and to get back to your content question, and the next article, which we'll probably publish next week or two, addresses the question, why doesn't Reserve just YOLO into all the countries of the world? Why don't we just open up and say, hey, come and use us? And we could do that. If that was a sensible idea, we could be doing that. And this looks into why we choose the countries we do, and how we maximize for success, I think is the best way. So that's very much with the compliance team. And I think it came out of the last AMA, where it's like, well, we want to open in America, and each state is different, and some regulate a lot, some regulate less. And if you apply that to the whole world, it's a massive canvas, but you have to tread, we want to do well for the people, number one, but it's how we can build properly so everyone gets our service. So the next one is very much talking to the people who are involved in making those decisions and distributing Reserve, and pointing out the ways that we're doing things, which probably not many other crypto companies are doing. So I quite like that one. And I think almost everyone in Reserve has a good story to tell me. And by telling it to me, I tell it to everyone in the community. So I want the landscape of Reserve to be painted quite well. We are looking to do something over many, 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 many years, right? And the sooner we get there, the better. But we want this to work for a very, very long time. So it's fascinating watching the people doing that now and thinking in that direction now. But then it is absolutely great fun just to go to the separate teams and say, hey, there's a big community here who really want to hear everything you're doing, and your stories are interesting. So let me tell them. So that's why that's my main focus at the moment.
Brilliant. Long may it continue. Because I'm pretty aware that Nevin's always said that there's a kind of a lot of information within Reserve, and not a lot of it gets out. The Reserve team almost have infinite gravity, where information can't be released. But it's much better to be able to have, like, just as you've been doing, an article on a particular area of the team, just to highlight what's going on, because there is obviously an enormous amount of thought going on that we just, I guess we can't even contemplate what it is that sometimes people are thinking about.
Yeah, exactly. I mean, people don't find other people's jobs that interesting. I mean, you may find it among friends and families. It's like, what's your job? Oh, I work at a bank. I'm doing a corporate something. People move on from their jobs, talking about their jobs after 2 or 3 minutes, unless they're really going through something. And And again, I think there was, to your point, I think over the last 2 years, even 3 years, like it's not specific. We don't want to shill, or we don't want to, talk confidently about the future, because we do. But I think we did kind of impose that wall of silence quite a lot, to the point where people looked to Nevin to say everything. And I think that probably grew, those walls probably grew a bit too high. So it's having everyone in the company the freedom to talk, and people are sensible. They know what stuff is off the record, or has to have a, what's that word? Has to be silenced until it's, and that's you can't announce something until you can announce it. But that doesn't discount the other 80% of information that could be freely given out if someone comes and asks a question. So I hope that's where I'm helping.
Yeah, I also understand that because the team can't, because they're US based, the SEC has a rather looming presence in all of this, in that you can't be seen to be shilling your own token a la XRP. So there are, there are lessons to be learned there. So the kind of, we're not going to tell you until it's done is kind of just it's playing as safe as possible, because the entire history of all reserves communication is open to the SEC should they decide that there's something to go at.
Yeah, exactly. And exactly what you said. So, but again, that doesn't mean there's lots, we can't talk honestly and transparently about what we're doing and let others decide if that's a good thing or a bad thing.
Yeah, okay, cool. Alrighty, so I think Braden has a last sensible question. More will become apparent about that.
Yes. Hey, Sinatra, so we heard that you have a new idea for governance. Can you go over that with us?
Oh yeah, it's a bit it might get a bit complicated. I'll try to keep it as simple as possible. For some context, the way our tokens, or the way a lot of our tokens will be governed, is in a decentralized way. And currently, a lot of DeFi protocols, what they do for decentralized governance is a system called simple token voting. What that basically means is you have one RSR token, let's say, and then you have one vote for the governance. And so in governance, you can decide what changes in our tokens, for example, the collateral basket, or you can decide how revenue or how much revenue should be shared with the RSR staker. So definitely some important decisions to make there. However, so the majority of the DeFi protocols right now use a system called simple token voting, and there's like a lot of flaws with that system. And the most obvious flaw is the fact that a wealthy individual or a wealthy company can simply buy a ton of RSR tokens, let's say, and they can influence proposals, governance proposals, in their own to their own favor, like in their own to their own benefit. That's what I'm trying to say. And so we've written about this, like Taylor Brent, our lead protocol engineer, has written about this in the past. Just the fact that decentralized governance right now is flawed. We need to find a better solution if we want this whole decentralized governance thing to take off. And so I've been talking with Taylor a little bit, and I've come to an idea for how I think, well, I'm saying I, but it's like a lot of the ideas are just from other people. But basically, I'm going to propose the idea that I think might be a better decentralized governance solution. But I need to give some context. I'm sorry if I'm going on a long talk again, but here we go. So with simple token voting, if you think, okay, so we have an issue, a large entity could buy up a lot of tokens. You could say, well, why don't we just KYC every governance member, and KYC that it stands for Know Your Customer, and it means you basically make everyone identify themselves, and then you give them one vote. It's basically how democracy works right now. And so you could do that, but there's an issue with that. Well, there's two issues with that. The issue with KYC is, first of all, who's going to do the KYC process? For example, with the Reserve app, we have to do KYC too. That is a centralized process. The second issue, even if you would find a solution for centralized KYC, the second problem is the fact that even if you KYC people and everyone gets one vote, this large owner of tokens or this wealthy individual can still bribe people that have KYC to vote in their benefit. And so that is not a solution either. So how do you solve that? The solution I'm proposing here basically has two distinct aspects that I think might be a solution. So first of all, I do think we need KYC, but I don't think we need centralized KYC. And so there is this project called Proof of Humanity. I'm not sure if people here have heard of it. Vitalik is a big fan of Proof of Humanity. Basically, what Proof of Humanity is a project where anyone can verify that they are a unique human being. And the way you do that is by registering on chain, and you have to. It's a small process of you have to record a video of you doing something, and you have to give your name. You don't have to give any like social security numbers or bank account numbers, obviously. So it's only like high level information that you give. But basically, you do that. You register, and then the thing you registered, so your application goes to a decentralized group of jurors that can decide, that can basically allow you in that group. Basically, they have to decide, is this really a unique person, or does he already exist in a database, or is there something going on? Once you have the database of these unique humans, anyone can challenge another human. So if you think, well, this person is in the database twice, or this person for any reason is not a unique, like it's not who they say they are, for example, anyone can challenge another person, and that challenge again goes to that decentralized group of jurors, and then they have to decide, okay, do we kick them out, yes or no? And there's a financial incentive to do so. These jurors get paid to do that, and everyone that registers into the Proof of Humanity database also has to pay a fee to do that. So I think this is the solution that comes closest to a decentralized KYC. Okay, so let's say we have that solution. Well, we still have the other issue, the issue of the wealthy individual being able to bribe people to vote in their benefit. So how do we solve that? The way that we brainstormed about this is one way to solve that is with a technology called zero knowledge proofs, or ZK proofs. And you see that a lot in crypto right now. Some layer 2 solutions like ZK Sync use ZK proofs. What a zero knowledge proof basically is, it is a technology to prove something without showing the data to prove that. And I'm trying to make this as simple as possible. So what that would mean for a decentralized governance context is anyone will be able to, after they, let's say, KYC in that decentralized way with Proof of Humanity, anyone will be able to vote on proposals, but you won't be able to show what you voted for. So you will have a ZK proof saying I have voted, but that proof that says I have voted will not include the data about what you voted for. So what the end result of that approach is everyone will be able to prove that they voted, and those votes will be counted for the actual proposal, and no one will be able to actually prove what they voted for. And so if you cannot prove what you voted for, then you cannot be bribed, because you can say, yeah, I voted yes, but if you cannot actually prove that you voted yes, then the briber is not going to pay you for that. And so that is the second layer of that solution. One more thing I'll say here is that there is a potential downside of using this approach, because, for example, my first reaction when we discussed this was, well, people like Nevin, the CEO of Reserve, are very smart, and I trust them with more governance power, like voting power, than others. Just because he's so involved in the project, he's pretty smart, and so don't we want that person to have more voting power, right? Because if we do the solution that I just proposed, then everyone that holds a certain minimum amount of RSR will just have one vote. And so the solution to that last comment is basically the system of delegation. So we will have that in our initial version too. But basically, anyone can still delegate their vote to someone that they think will make better decisions for them, or good decisions for them. Sometimes it's just because you don't have much time to follow up on the governance, so you can just give your vote away to someone else. And so I think with that combined solution, so I'll repeat once more. So we have a decentralized KYC in the form of proof of humanity. We have the non-bribability, let's call it, through ZK proofs. And we have the delegation. I think with that combined solution, we're well on our way to a better governance model than simple token voting. And it's very possible that I'm missing stuff here, right? So I can't wait to discuss this with the general reserve community on our forums and stuff. But I think it's a very good start for a better governance model.
Very cool.
Does any of what I said make sense, Braden?
Yeah, no, it totally does. I'm not saying I had like a similar idea, but I had always thought that proof of humanity, you know, it's like a decentral. If you guys haven't checked it out, definitely go. I'm not sure if it's like proofofhumanity.com, but it's like POH is like, you know, instead of proof of work, POW, people use proof of humanity as that POH abbreviation. But go check it out. You can see what it is. But I always thought of it as a pretty great way of solving that voting issue myself when, you know, when was it back in November or December that it was kind of getting a little bit of talk about the platform. So, but anyways, yeah, I think it's really cool. Thank you for taking the time to explain that to us. I think Malo has one final comment.
Yeah, sorry, I do. Just for information, that proof of humanity is proofofhumanity.id is the website. So yeah, we're at 59 minutes, so we're going to try and wrap up after this question, I think. I don't know whether anyone's been on Twitter recently, but a couple of people with quite a lot of followers have said that Mainnet is at the end of April, and used some sort of screenshot that came from somewhere to prove the point. Unfortunately for everybody listening, Mainnet will not be at the end of April. And Reserve will be confirming this on Twitter as well. But my throwaway question, because Chaos is listening apparently, and he wants to know. So when is Mainnet, and how can we find out?
Is this to me?
You want to take this one?
It is, yes, it is.
Oh, God, give me the hard questions.
Oh yeah, when Mainnet?
Yeah, give Sinatra the lowball ones. Let me think. I mean,
well, isn't there somewhere on the web we can find out?
Yeah, there's some kind of dashboard. We've posted the link so many times, you've probably all memorized it. It's bit.ly.something.something. I guess what I will suggest is, I'm in the Mainnet meetings a couple of times a week and listening to them work, and they are mega Chad brains, right? And they're working out some very interesting ones. Can I say any at the moment? No, I won't. But I mean, they are very conscientious people, and I think it's right to say that none of us are going to allow perfect to be the enemy of the good, right? As in, it's not about polishing the statue for months and months and months. Like when it is in a robust, good state, and when it's been well tested and well audited, it's ready to go, right? And there's they're going very smoothly through the process. What's a good analogy? Like, okay, I was on the Wikipedia page for the Golden Gate Bridge the other day in San Francisco. I'm reading about how that was put together, and it took something like 12 years and $21 million in those days to do it. There was huge protests from the city about doing it in the first place. Lots of people said, oh, it's never going to happen. It's going to take too long. They went through so many obstacles. They had to build like a big concrete bunker under the sea to hold the pylons. 3 or 4 people lost their lives while building it. You know, it's a whole 12, 15-year process. And someone asked the lead architect halfway through, and they said, how long is this bridge going to last? And he said, forever. Right? And all this happened, well, probably 60 years before any of us were born. But then one day it was complete and it opened, and it's been proven right so far. It's had 100 years worth of cars across it every day, people, thousands and thousands of people. And it doesn't need much maintenance. It needs a fresh coat of paint now and then, needs the nuts and bolts checking, et cetera, et cetera. But they did it, and it lasted a long time. But I bet they didn't open it until they knew that it was structurally sound, roads tested, and ready for the population. And I think it's a bit the same here. Like, I would like Mainnet to come out tomorrow or next week, right? But they are building it in that same kind of way. Like, it will be road tested, ready, secure, with the very big bullish ambition of lasting for, let's be less confident, for decades. So when it lands, you know, whichever month it is, whichever day it is, it's been built for that long-term vision. So I'm a ranger first and foremost, but I get the patience that needs to be there. And so, I mean, keep following the dashboard. It's open and honest. And, you know, at one point it starts hitting 98%, 99%, 100%, code freeze, a few audits, and then hopefully we're there. So, yeah, it's fun to watch. I wish I could record their meetings and put them out there. And but I don't think we need them too under the spotlight. I just want them to build it safely and carefully in a vacuum. And then one day it's with us all.
Brilliant, thank you. So just for clarification for anyone who's new, we are currently at 80% completion on the progress from start to code freeze. So there's 20% left, and I guess it's up to you to decide how long you think 20% takes to complete. We'd better not ask Mr. Pareto. But so we're a little bit over, so unfortunately we're not going to have any time for open questions, but feel free to ask them in the lodge or on Twitter or any other way you get your information in Discord, etc., etc. So what we'll do is we'll just wrap this up. We'll say thank you ever so much for everyone attending, for giving up your daytime to listen to this chat. Thank you very much for Sinatra and Smeddy for your full and comprehensive answers. Brilliant to listen to you as ever. Thanks to Braden and Chad, I'll just shorten it there, for hosting with me. And once again, thanks everyone for listening. We are recording it, so we'll pop that up on Twitter when it's ready. Okay, thanks very much, guys.
Thanks for having us. Bye-bye.
Thank you for coming. Take it easy, guys. Enjoy your Easter.